It's come up with like over 4,500 trade ideas, an insane win rate. It does something like almost 30 trades a day. And so that really has been value add for users. The next stage of this, and you rightly allude to it, is we turn this into an LLM.
Tokenized oil making up most of the trading volume on Hyperliquid over the weekend, and even serving as kind of the price discovery while traditional finance markets are closed during that time.
We have something called trigger-based orders, and I think this is an underutilized feature. But essentially, you could set a limit order based on a cross-asset price. Like, I only want to be long this basket when hype is greater than 44.
If this alignment question is solved, that will be the single biggest contributing factor to bring back what was formerly known as an alt season.
It's good for certain types of trading, which is on long tail assets with high leverage that you can't necessarily get on Hyperliquid.
GM, and welcome back to back with 2 episodes today. This time we are joined by Huff from Pear protocol. I would assume that quite a few of you are already familiar with him if you have listened to his Crypto Narratives podcast back in the days. I've personally been an avid listener, so very much looking forward to this conversation with you, Huff, to learn more about your background and your journey in the industry, but also about Pear protocol, which now for the active Hyperliquid traders who are looking for something beyond just a blank long-short exposure on individual assets is probably a very handy suite of tools and features. So yeah, welcome on the show. Thanks a lot for joining.
It's a pleasure to be here, and I'm looking forward to the conversation.
Great. How did you originally get into the industry, and how did the idea of Pear protocol emerge, and how did the product evolve over time?
Yeah, sure. So I'm a trader by background. So for me, I spent like almost a decade working for different investment banks in London on the trading floor. And I should say, importantly, I spent most of the back half of my career building long short strategies for institutional clients. So trader by background, kind of institutional focused. I then got into crypto because we had an opportunity to do some yield farming on chain. So me and a few friends, we were doing that. We were selling vol and we were pair trading. And essentially, we were managing money in crypto as part of a project. And that experience of trying to earn yield, either from DeFi farming, either from selling volatility and hedging it through like call options and delta hedging those, or pair trading, I realized that pair trading was really manual. So this was like 2021, 2022. Because you wanted to trade on chain, the mandate was on chain. We would pair trade on somewhere like DYDX. I would open one long. I would then find the other ticker, open another short. I would then go and chart it in trading view, let's say ETH over SOL. I would then go on Excel and work out my net funding and my net P&L kind of situation. And then I was running some like very simple kind of Python scripts for take profit, stop loss, and other things as well. And so it was very kind of manual as a process, and you can trade via API and things, but the whole process was really clunky. And I had this thesis that pair trading and long short trading is really big in traditional finance. Most macro hedge funds are long short in some kind of way, or thematic hedge funds are long short. And I thought one day this will come to crypto, because one day in crypto, you will have a world in which you want to be kind of long the good stuff, like long Bitcoin, long hype, etc., and then short some other stuff against it. So pair was really born out of a frustration of me as a trader wanting to pair trade and basket trade more efficiently. And then looking around, I didn't see it. So then I decided to build the solution.
How did the product evolve over time? I'm pretty sure you were already around in the 2023, 2024 GMX days. So you were never really stuck to one individual perp DEX. So how did the features evolve over time? How did you select which perp DEX is the right one to build on top? And how did you achieve that modularity, that you were functioning as a layer on top instead of protocol that is completely isolated from the underlying?
Yeah, really, really good questions. For us, the first and foremost, we wanted to build this in a decentralized manner, right? So anyone can go and like build this on top of Coinbase or Bybit or something like this. And there are like very kind of high level solutions available for the kind of real tier one. For me, my thesis was more that retail and pro tail will start to do more pair and basket trading. And so then we looked across the on-chain landscape. This was 2023. And our first integrations were on Arbitrum with GMX and Vertex. So Arbitrum back then, if you think back to 2023, was a great venue for perps trading, still is a good venue for perps trading because they had very kind of optimized RPCs and they had good latency and some like features that you needed. GMX was our first integration, and so we were routing our orders through there. And you make an important clarification. We build on top of these platforms. We're not the liquidity venue itself. We're an order management system. And GMX was great as a experimentation ground because everything is smart contract based, right? So we really had the benefits of being able to work with open source code. We were really close to the team. And we managed to do some fun stuff like make the trade positions composable as well, because this is kind of DeFi. So like everything is tokenized, right? The limitation of GMX as a platform was it had high fees and it didn't have cross margining. And so naturally it was a good time for us to look at other types of venues. Vertex was our first integration with an order book, which meant much faster execution, much cheaper execution as well. And it was a experience which really gave us product market fit. So the users saw a wide range of altcoins that they could trade, they could long short them, they could have them in cross collateral, and all these kind of features that you need when you're pair trading. And so for us, that's where we got the first kind of few 100 million of volume was on the Vertex engine. And so that for us was validation that people do want to do this kind of trading and you can do it on chain. Since then, we integrated with an intent-based solver with SIM. And then I think most people know us as very much Hyperliquid aligned, which was our most recent integration last year.
Very nice. How did you find the path over to Hyperliquid? And do you think that this is kind of the final destination of one perp DEX to rule them all, or to at least serve as the dominant underlying infrastructure, like the base layer of perps trading for the foreseeable future? Or what is your view on the competitive landscape of perp DEXs right now?
So I think Hyperliquid did a couple of things right. Number one, they identified that people want to trade long tail assets as soon as they're listed, right? And so Hyperliquid for a long time, you couldn't really do this on GMX. You couldn't really do this on Vertex, but Hyperliquid made it possible for you to trade a brand new meme coin listing with leverage or a brand new kind of layer one or layer two or whatever that was, right? And this is 2024. I think they did that well, was tapping into the zeitgeist, and that mindset has continued, right? They know now that people want to trade HIP-3 assets. They want to trade commodities. They want to trade stocks. They want to trade prediction market binaries and things. And so Hyperliquid's growth story is no surprise to me because what they've done is they read the pulse of the room and what people want to do, right? They want to do multi-asset margin. They don't just want to use USDC. They want to use the hype or the Bitcoin or whatever else is in their wallet to trade with. And I think if I look across the landscape, there's lots of people that are trying to build in the perpetual DEX space. I think there's some really, really great teams. For us, what Hyperliquid provides is a very kind of fast and secure environment to execute trades, an environment that is constantly innovating in terms of the underlyings and the asset universe that you can trade and how you trade them, like things like unified margin and having all these different HIP-3 deployers on top, etc. And then the final piece I think that Hyperliquid provides, which you don't necessarily get elsewhere, is they really leaned in to the builder code architecture and having other people build on top of them. And I think what other people are now starting to do is realize like you don't have to play this game of user acquisition. What you can do is just let other front ends like Pear do all the hard work of educating users, finding users, and do all that. You just provide liquidity as a service, if you will. I think that's where they're going to come under some competitive pressure just because of margin compression. Hyperliquid is still relatively an expensive place to send taker orders. And so I do think you'll see some like value in integrating with other DEXs over time for Pear. We're by no means married to Hyperliquid, but for now it is our default engine. It's the place that we route 99% of our volume through there. And it's a great environment to build in for the reasons I just mentioned.
How do you view the relationship between Hyperliquid as the base layer with the protocols built on top of it? I've recently heard a lot of podcasts talk about the fact that, well, the Hyperliquid core team is kind of working in an isolated manner. They are not really explicitly promoting any of the projects built on top of the Hyperliquid Perp DEX and the Hyper EVM. So it is somewhat of this, credibly neutral, unopinionated approach. Much different, for example, to Solana with the Solana super team that is very engaged in the ecosystem. Do you think that this is overall an advantage for protocols building on top of Hyperliquid and on the Hyper EVM because it is a very meritocratic competition? Or do you think that it is kind of making life more difficult than necessary for those that have already gained traction and where there is an obvious user market and product market fit?
Yeah, I mean, as a builder, I would love to live in a world in which Hyperliquid were like, dude, we're going to give you some grants, we're going to give you some incentives, we're going to retweet your stuff, we're going to like really push it, right? The reality is that's the way that everything has typically worked in crypto. And it's full of cronyism, right? Like, I don't want to pick names, but like you look at Arbitrum and there was like definitely platforms that got favored, right? It wasn't a meritocratic ground for builders. And so some like Solana is another great example, right? It's not a level playing field for builders. And so in a way, if I zoom out outside of my like own personal bias, I think one of the reasons why Hyperliquid can continue to attract such talent in terms of builders is because they've kind of leveled the playing field. They've said, look, everyone gets a free shot. Here's the docs. Go ahead and kind of take your best shot.
Can you, just for the sake of completeness, also explain what SIM and Simeo are? I would assume that quite a few people who have found Pear protocol over the last couple of months through Hyperliquid are not actually familiar with what SIM provides. So how do they differ from Hyperliquid as perp DEX and any other features or any other strategies then people can execute over there that are not available on Hyperliquid?
Yeah, so I did miss like this phase where we integrated with GMX and then with Vertex. And before we integrated with Hyperliquid, we went down the path of using an intent-based solver. And that really completed our kind of product suite, right? So GMX was pool-based liquidity. You traded against a pool, which was great because you could do maximum size and you're trading against an oracle and there's no slippage. Vertex, we traded against an order book, which is the same as kind of Hyperliquid and all the benefits thereof. But you do feature things like sometimes higher fees and slippage and sometimes a limited asset universe. Whereas the Simeo architecture was a bit different. It was RFQ based. And essentially in the RFQ world, you sent an order, like let's say I want to be long ETH BTC or ETH Sol or whatever it might be. And then the market maker on the other end, the solver, would pick that order up. And so the reason why you would want to use the Simeo engine is because the solver, the market maker, can hedge with the whole market. So you could trade any of the perps which are listed on Binance, on Bybit, or any of these other venues because the market maker just takes your order, hedges it elsewhere, and gives you the fill, right? And takes their spread. The other thing that the Simeo engine provided was high leverage. So on some of these altcoins, you could trade 4x, 50x, 60x. Whereas most venues like Hyperliquid and Vertex before it, they were kind of somewhat capped at 10x or 20x on most names. And so what we saw was people that had a very strong view on altcoins. They came in and they were doing either directional X trades or they were doing long short trades with high leverage. And ultimately, you could think of variational today as a good kind of parallel of what SIM pioneered. So variational is an RFQ model where you send these orders and then like either the liquidity pool or the market makers pick it up. It's good for certain types of trading, which is on long tail assets with high leverage that you can't necessarily get on Hyperliquid.
So the advantage there would be that you can avoid scenarios like what happened with Jelly Jelly a few months ago, and I think there was another instance where people were just trying to like gamify the open interest limit on Hyperliquid to drain profits from HLP, right?
Exactly. From like a risk perspective, you're just OTCing essentially or RFQing with a market maker on the other
Oh,
side.
okay. I think that brings it to a good point.
Yeah, and each trade is isolated as you versus not isolated margin, but each trade is isolated as you versus the market maker, right?
Hmm.
So the market maker can choose to accept an order, can choose to reject an order. They can charge you a slightly wider spread, which is obviously where these guys make money. But it's slightly different to like everybody piling in an order book with like very thin kind of offers at the top of book.
To dive a little deeper into the Pear protocol product, can you share your screen and walk us through the platform a bit?
Of course, I would be delighted to. Awesome. So this is Pear. When you land on Pear, the first thing that you'll see is the charting module, which is what most people use this for. So let's say I want to take a pair like ETH Sol. I can see here on the daily time frame how that pair has kind of traded. I don't need to go and type ETH divided by Sol into TradingView or into Terminal, etc. And it will show you the price ratio, right? So just one divided by the other, 24.65. However, in reality, when you're pair trading, you don't necessarily want to be 50-50, right? It's the price of this divided by this is 24.65. And so here we have Agent Pair. Agent Pair is our in-house AI agent. And part of AI Pair's offering is to show you real-time statistics on any given pair or basket. So here I've chosen ETH Sol. It's telling me that the correlation on 4-hour timeframes is 0.88, so they're highly correlated. They're not co-integrated in terms of like a mean reverting relationship. It tells me the Z-score, the vol of the pair, and then most importantly, it calculates a suggested beta neutral weighting. And this is really important because assets like ETH, Sol, Hype, and Sol, or like even a basket of longs and shorts, it's not necessarily optimal to be 50-50. I'll give you an extreme example. If you were long something like Bitcoin and then maybe short Zcash, clearly you don't need to be 50-50, right? You could be maybe 40-60 or 30-70 or something. So we work out those numbers for you. And so once you've calculated what your beta neutral weighting would be, you can see this is updated to 43.57. We actually show you what the weighted ratio chart looks like. And so now you can have a much more meaningful analysis of what it looks like over time to have been 43.57 ETH Sol. And if you need more of a kind of visual breakdown, we have these performance charts here that show you on different timeframes where the returns are coming from. So more recently, it's because high ETH is performing really well, the portfolio's up, and the short Sol is doing less good, so to speak. So on the charting side, that's one of the big values. I will just rebalance these and come back to basket charting as well, which is another thing that users use us a lot for. So let's say I want to be long ETH, Hype, and Bitcoin against Solana, and I can see on multiple timeframes what this looks like as well. There's the weighted ratio, and again, I can look at those performance breakdown charts of each of the individual legs and start to build my long-short basket trades. We also have the same agent pair statistics. So here it's saying maybe you want to be 45-55 just because I think mostly due to hype and the way that's been trading lately, and we can look at different timeframes. So the next stage then is one-click entry. I can slide my leverage here. I'm going to go 20x and go long this basket, short Solana. I'm going to do it in, let's say, $500 and place a trade. When we are doing these trades, ultimately they are getting executed on Hypercore, and I am in this position right now. So it should show up here on my front end, like so. And so I can see a breakdown of the assets that I'm long, short Solana, my position size, the weighted entry or weighted ratio entry level, how much margin I used. I can then go and like share a P&L card for this trade. I can make Jeff my background and share it, so it's quite memeable. But the most important thing is risk management. And so we allow users, once they've entered this basket level at 4.476, a take profit or stop loss on the basket level itself. So you're no longer having to manage these individual legs. What you can do is set a take profit in percentage, dollar, or weighted ratio terms. So I'm going to set the weighted ratio at, say, 5, and set a stop loss in dollar terms. Say, once I've lost $500, get me out of this trade. Like so. I can even do things like trailing stop loss as well. So have a trailing stop loss 4% away once the price of this basket is at least 20% up. And so then the risk management is really key for our users.
No.
You can
Is
also,
there any like pitfalls or like any complexities if people are just used to trading long short on Hyperliquid and they're using Pear protocol for the first time? And especially when they start playing around with the like immediate entry and like shorting, let's say, a basket against like one really strong leg. So let's say, for example, your long Hyperliquid, which would have been a pretty good trade over the last couple of weeks, and short, I don't know, XRP, ADA, and some of these other ones. Anything you have to pay attention to in terms of risk management, or are there like any pitfalls that people have experienced in the past, and how do you navigate them?
Yeah, good question. So one of the things we show you is you're clearly long a bunch of perps and then short another perp here. And so we do show you what the annualized funding is, because this is the net funding of your entire basket trade. And so sometimes when you're short a basket of, let's say, like altcoins, you can be paying quite a lot on the funding leg. And so that's something that you want to keep an eye on. Thankfully, here, once the funding calculations have been made, we show you in dollar terms how much funding you've paid. So we make it really easy for you to see at trade inception what the annualized cost is to run this trade. And then we also show you here in dollar terms how much you've been paying as well. So I think funding is definitely one thing to keep in mind when you're executing these trades. Sizing is another. And then one of the really important things is at any given point in time, these are market orders. But what you might want to be doing is something called ladder orders, where you kind of set limits much lower down on the ratio, like let's say here at 4.46 and then 4.45 and then 4.44. So you can do those ladder orders here, like so, and you just set your ladders and where you want them and how many levels spread out. You might want a TWAP into that pair trade as well, into those basket trades. And then we have something called trigger based orders. And I think this is an underutilized feature, but essentially you could set a limit order, let's say down here at 4.45 on the basket. You could trade based on something like Bitcoin dominance. So get me into this trade when Bitcoin dominance is above 58%. You could do it based on the cross asset price. Like I only want to be long this basket when hype is greater than 44, let's say. And I'll place that trade so you can see how that works. But these trigger based orders are really powerful. I just placed it here. So get me into this basket trade if hype is greater than 44. And then we also have something which is quite fun, but linked to prediction markets. So you could do something like if at the next Fed decision in March, the Fed cut rates by 25 bips, we wait for the market to get to 99%. We don't wait for it to settle. You could also get into this trade or any trade that you construct subject to the outcome of a prediction market. So I'll place this here and you can see it's here. So go long this basket if that prediction market outcome happens, which it already has done, because I think the market must be trading pretty high probability wise for that. So those are some of the extra features that I think people don't use as often, and they really play into the whole risk management thing. The final piece that I'll say, I know I've spoken a lot, is being able to adjust your position mid trade. So here I could go like overweight long high ETH, sorry. I could rebalance back to my initial weights, which people don't do often enough. And we're also adding the ability for you to rebalance based on beta as well for the trade. So once you start to get a little bit more smart about what you're doing in pair trading, I think there's a whole bunch of features which will answer the question to you as to why can't I just click a long and a short on Hyperliquid. And what we found with pairs users is many of them have that skeptical lens, but they have the open mindedness to try it. Like, why are hundreds of people using this every day? Whereas I still do all my clicking on Hyperliquid. And one of the consistent feedback we get from people is if you spend 10 minutes on the platform, like I just did now, you'll find new features that you just didn't know are there. And I think that's really powerful for users to kind of see.
Yeah, I think these are some of like the coolest features I have seen on a perp deck so far. Like it really gives you kind of that infinite canvas to play around with new stuff. I think that like in terms of the user group, who you're targeting, would you say that for people to actually utilize these features in a manner that doesn't only like introduce more noise to like, setting some super complex conditional orders, but like to actually improve their bottom line P&L. Would you say that the majority of the market participants who are active on Hyperliquid are at a stage yet where they can properly utilize these tools? Or would you say we are still somewhat too early, somewhat too retail driven, and there needs to be much more done on the educational side before people can utilize these features?
I think we are going through a process of more and more people pair and basket trading. And by no means does everyone have to use these features, right? We have people that come to the platform and they just go long hype, short a bunch of altcoins, right? And they don't look at any of the other stuff. And that's totally fine. Because what they like about the platform is they can enter it in one click. They can see what the current P&L is. They can close it in one click, right? And you can share the P&L card and like all this kind of stuff, right? Um, so there are people that just come and narrative trade on the platform, and we just make it simple to do that. For some more sophisticated players, absolutely. Like there is lots of articles, there's lots of videos, there's lots of stuff in our Discord. We are trying to build an entire community around pair and basket trading, and I'd say we have been one of the most prolific in making that a thing.
Yeah, where does the support agent pair come into play? Since he might be able to assist you with the evaluation of some trades. How does it work? How does it differ from like a generic LLM, and how is he trained?
Great question. So what I just showed you was agent pair kind of phase one, if you will. I'll share my screen if that's good with you. So yeah, all this data on demand, it's not really AI, right? It's just us having a statistical library that gives some meaningful outputs. Where this turns into some more like meaningful stuff for users is we provide real time, or agent pair provides real time signals for trade ideas. And for instance, it's saying you want to go long Doge XRP, and it tells you from a statistical perspective exactly why. So based on Z scores, rolling Z scores, spreads, etc., and it gives you some detailed analysis. This is not like AI slop. This is purely based on statistics, right? And this concept of statistical arbitrage. And so if you look at Agent Pair, it's come up with like over 4,500 trade ideas, an insane win rate. It does something like almost 30 trades a day. And so that really has been value add for users. The next stage of this, and you rightly allude to it, is we turn this into an LLM. So soon you'll be able to see this on what will be Pair V3. But essentially, whilst you have trades on like this, you'll be able to chat directly to it about your positions and just kind of ask it like so. Or you can say, hey, what do you think of ETH BTC? And it will give you some outputs for that as well. And so we're really trying to make our AI agent part of the journey for a user when they're using Pair to augment their entire trading experience.
I think that's a very good step to grow the user base, but also make them sticky, because that really helps them understand the protocol. I think Pendle also set a great precedent with that when they weren't the first one, but they were the first ones to gain a lot of DeFi mainstream traction with yield trading. And they had that like Prof Pendle, or like that chatbot down in the right corner. And since many people understood the basic utility of what Pendle offers, you're usually, unless you have a traditional finance background, not deep in the weeds enough to really know these individual numbers, these individual metrics you have to pay attention to when yield trading. And I could imagine that for Pear protocol and some of the risk metrics, some of the statistical correlations, there are actually a lot of similarities. And I do think that, Agent Pair could assist a lot in bringing the products to more users and also make it more sticky. But besides Agent Pair, one other incentive to use Pair protocol is likely your ongoing points program. So can you share some details on that? How does it roughly work? What kind of actions are getting rewarded? What are you trying to incentivize? And downstream, what is the utility of the Pair token?
Good question. So we have a Pair token. We launched it back in 2024. And back then, the narrative was all about real yield, right? So this idea that you generated revenue like GMX and you passed it back to the token holders. And Vertex was doing something same, but they were passing it back in the form of like giving you more Vertex tokens. And so this idea was around that you had these protocols, they made revenue, and then you pass that revenue to the token holders. That was the main utility behind the token. And so we launched our token and we did that. We had an 80% token, a kind of rev share agreement, and then 20% came to us as treasury. I think as the markets evolved, we've looked and scratched our heads a lot more and brainstormed as to what does real token utility look like. And so for us now going forwards, we passed a governance vote recently, which means that 70% of our revenues are now used to buy back the token. 30% come to treasury. The other reasons to hold the token are you get trading fee discounts of up to 50%. So our token holders are also traders on the platform, and there's this like kind of symbiotic relationship between being both an investor in Pair and a trader on the platform, and they go kind of hand in hand. And then we're opening up more and more kind of advantages of having a pair token. So, for instance, the LLM, which will live native on our website, which is, I think I kind of teased it, but essentially it's hyper specialized in pair and basket trading, built off our own statistical library and plugged into a whole bunch of APIs. After a certain point, if you wanted to think much deeper about your positions, that might be a token gated feature. If you want to deposit into agent pairs statistical arbitrage vault, that might be token gated beyond like a certain amount of the first 10K of deposits, etc. And so for us, we're just constantly innovating at the edge of what it means to have a token, even so much so that like we're following all the drama with some of these other DAOs and things. And we are very much going to be one of the first to like take a view on what it means to run a token with real kind of value accrual to token holders.
Yeah, I think the whole detachment from shareholder or equity holder rights is a huge issue to fix. I talked to Beck the Bunny from Solitary.io a few months ago on the pod, and like he's trying to work on a framework. I know that Mia from Street Foundation is working on something, and I personally think that if this alignment question is solved, that will be the single biggest contributing factor to bring back what was formerly known as an alt season. I think that is more relevant than any like macro condition or like any industry internal evolution of product or whatever, because like all of that stuff has been going on without like solving the token question anyway over the past couple of years. So I think that is the crucial part that has to be solved. And I do think that particularly in Hyperliquid, because to me it seems like this is the only chain where people are still building in that ecosystem for the ecosystem in of itself. And it is viewed kind of as, yeah, like a I don't want to say like an irrational passion, but people really seem to like it. So I do think the alignment questions there are a little easier to approach than on ecosystems where you have a lot more potential conflicts of interest between the kind of base gas token and then the altcoins of the protocols built on top. But
For
yeah. Speaking of alignment and speaking of features to be launched down the road, you recently published an article on your X about the upcoming V3 of Pear protocol. Can you share roughly what to expect? Any new features, any new products that will be launched? If you already are able to leak a timeline, I think the audience would be pretty stoked to hear about that.
Amazing. Yeah. So Pair V3, the first thing I will say is most of the changes you won't be able to see because they're on the back end, right? So right now, I'm talked about our integrations with GMX, with Vertex, with SIM, with Hyperliquid, and Pair fans will know that each integration has taken a long time. It's taken a very long time because each integration was bespoke. Meaning, if I was to integrate tomorrow with like a lighter or extended or somebody like that, I essentially need to build a brand new backend, a brand new database that reads from their docs and then kind of creates these positions on the front end and then runs like all sorts of bots and stuff against that position. That's where like the engineering challenge has been. The V3 backend is a brand new backend which is modular in nature. And so it enables us to add additional integrations much faster. So it becomes a matter of weeks, not months. And so one of the things that V3 really has, which you don't see immediately when we launch it in April, is going to be this ability to add new integrations very quickly. On the UI side, what you will see with Pair V3 is a revamped UI. It's going to be much easier to create baskets. So right now, there's this like annoying process where you have to click one long and then find the next one and then find the next one, etc. Here, token selection will be a lot easier. So you'll just have the entire universe and then just add a whole bunch of longs, add a whole bunch of shorts, right? So it'll be much easier to build your baskets. And we are making baskets a lot more prominent. So users really have been trading, like 80% of our volume now is people trading baskets. And so we want to make featured baskets more of a thing on the UI. We want it to be much easier for you to build your own baskets on the site. Agent Pair will be suggesting baskets as well. And so people will see that. I think in terms of big stuff on the UI, what you'll see is Agent Pair has its own LLM native to the site. And so you'll be able to chat to it in real time about your positions or anything else in the market. Some of the other stuff that you'll see on V3 is going to be the vaults. And that's really like Pair maturing from being an order management system to being a full DeFi platform that offers kind of TVL. That will be part of the V3 offering. It might not be part of the first release of V3, but in April, we are looking to have the V3 front end, and you'll see new sections of the website open up to you as well. So I think overall the user experience will be better. The backend makes execution even faster and snappier, especially for the basket side of things. And we do realize that a lot of users come to Pear and they don't necessarily know what they want to trade. They have this like rough idea that I want to be long hype, but they don't know what they want to short against it, right? Or a rough
Yeah.
idea that you want to be long Bitcoin, but they don't know what to trade against it.
I mean, intuitively, I would say, okay, I like my major assets, BTC and Hype in particular, the most over the couple of last months. And then there's a bunch of stuff where it's either really hard to justify the current valuation on like the whole revenue meta and applying traditional metrics instead of like network premia. So that would put a lot of the L1 tokens on the short side. And then you also have that stuff that has been around for years where you know that the such supply dynamics are not really favoring token upside and the valuations are still inflated. So that would leave you maybe something with Cardano, something with XRP, maybe some of the infra plays where it is just really hard to identify any long-lasting and recurring bid. But yeah, so I would say I'd have that rough idea, but to how to execute it, how to risk manage it, how to really put it into practice, since I've never sat on a traditional finance options or trading floor, I think that would leave a lot of people maybe scared away to use the product.
Fair. I think that's, yeah, I think that's a fair comment.
Yeah. No, I mean, I'm definitely looking forward to what is to come for Pear. I think yeah, making these features more accessible will really unlock a new stage of not only participation in the perp space, but also if people are learning more about risk management, we can probably prevent the frequency of blowups that we have seen in the past. So, like the people who are in the space can actually survive for longer and contribute to participate in the markets for longer. But yeah, maybe one last question. I'm sure that some of the people listening have also known you from the Crypto Narratives pod. When will it come back?
Very good question. So, Crypto Narratives podcast is like a labor of love, right? I never think of it like, oh, I need to do this thing to like improve the business or like whatever. I do it because there's good traders out there and I want to talk to them about things, right? I think the reality is building Pear has been such a full-time effort, and obviously I trade myself on the side, so it's it's been a case of like finding time. I admittedly have become a father as well, so that's also been like a time thing. I think where we want to go with the Crypto Narratives podcast is go back to its roots, which is there are things that are good in crypto and stuff that is bad in crypto, right? And there are a whole bunch of liquid token funds. There's a whole bunch of crypto hedge funds. There's a whole bunch of people who you don't necessarily like see them on Twitter all the time, but they have a strong view and they allocate capital. And so, what I'd love to do with the Crypto Narratives podcast for the next season is so far we've had a lot of like CT names. What I want to do is get a lot of like liquid token funds and people that maybe don't post that often, but talk about what they're doing, right? Like they've got a thesis on grass, they've got a thesis on near, they've got a thesis on Tau. Talk to them about their trades, but not just their trade ideas, but how they size them and get into that like portfolio construction conversation as well. Because to your point about people losing money in crypto, I honestly think 90% of people are directionally correct. Like, oh, I want to be long, I want to be short, right? They're right. They just size it badly
Mm.
and they risk manage it badly and then they get blown out and whatever. I'm running a trading challenge and like I will lose 1K, right? 500K or whatever, but I'm like stop loss. I don't get emotionally attached to the trade. If I'm out, I'm kind of out. And I'm trying to teach people that, like, even, you know, myself, like, it's not this perfect journey. You know, you just need some good kind of frameworks in place.
Mm. Given your background in TradFi, you are probably very well in touch with the more professional side of traders in crypto, but also probably know some TradFi funds who are either crypto curious or have already played around. And I would say that across all verticals of on-chain finance, we have seen quite a bit of change in the type of participants. We are seeing a lot more interest in RWAs, for example, with tokenized oil making up most of the trading volume on Hyperliquid over the weekend, and even serving as kind of the price discovery while traditional finance markets are closed during that time. How do you see the participant base of traders evolve? And do you think we will see further institutionalization of crypto trading? And how do you think most of the TradFi funds or liquid funds that are currently exploring crypto are looking at the industry right now?
Yeah, I think you're right. Like, there is definitely much more interest to trade some of these other assets on chain. And so the irony is you've got like crypto rails, but TradFi assets. Where I'm particularly interested is seeing how HIP4 comes about and some of the prediction market things as well. When I do speak to my like TradFi guys or more institutional guys in the crypto world, I think one of the big concerns still remains around liquidity for these things and being able to size in them without getting like massive wicks or massive kind of scam kind of wicks. But I think the market is getting much better. Like recently, the amount of volume that's taken place on something like CL, the oil contract, it's really gone to show that you can put on some decent sized positions, right? And would love to see a world in which people come in and they start to arbitrage these funding rates a lot more aggressively so that you don't get these wild swings between like one funding period you're paying 400% annualized and the next you're receiving 200% annualized. Like the world in which me and my TradFi peers is excited about is when you just get much less volatility in the funding rates. And so you can take these positions over a longer term time horizon as well.
Do you plan on adding any features regarding like funding rate ARB also across exchanges? Because I would say that quite a few people, when it comes to pair trading, have mid to long term views of stuff that is post for more upside, whereas there is other tokens with like constant unlocks and constant sell pressures. So that is a time frame where funding rates can actually become an issue. Is there anything in the pipeline how Pear Protocol tries to like assist people with assessing the potential risks or also upsides on funding rates, and maybe to take advantage of funding rate discrepancies between perp DEXs?
Beautiful. I won't say too much, but that pair is constantly innovating, right? So people kind of wrote us off 6 to 12 months ago as just this niche place that you can do like long ETH, short Bitcoin, or whatever it might be, right? And we've shown that you can do basket trading. We've shown that we are going to have vaults. We've shown the power of agent pair. I think the next thing for us is to show that we can build a very retail friendly, and that is something which we haven't talked much about. That after that, the fact that we can build an institutional product for some of these liquid token funds and crypto hedge funds that I talked about, which is again something that's not been too public. And then throughout 2026, towards the end of it, you can expect more integrations with other venues. And as part of that, the ability to then do funding rate arbitrage, right? So if Pear is integrated with, let's say, Perp Dex number two, then there's a world in which you can send your long order to one venue and short it on another venue, right? All in one click. And although those solutions do exist with other providers, I think Pear would be a natural place for you to do it, just given the way that the UI is done and what our users are already doing anyway.
Great. It was amazing having you on, Huff, since we're nearing the hour. Where can people find you? How can they reach out if they want to work together with you and Pear? And any last takes you'd like to share on the show?
Yeah, so I'm Huff on Twitter, so HUFHAUS number 9. I'm sure you can link that. Pear is just Pear_protocol on Twitter. That's the best place to find us. And then the Discord community is very active. So our traders are in there, our developers are in there, some of our investors are in there, and people are just talking about pair trading, basket trading ideas and stuff. So I would say if you really want to learn more about this stuff, get in the Discord because that's where all the day to day activity is. There's nothing like final to say in my mind other than I'm really grateful to you, Max, for hosting us on the Odyssey podcast. Big fan of what you guys are doing and grateful to be able to take 45 minutes out of my day and talk to you guys.
Thank you very much. I really loved this conversation, especially since you are one of the OGs when it comes to like producing public content around the trading side and market side of crypto, also with like people who actually know what they're talking about. So yeah, very excited for what is to come for Pear Protocol. I'll make sure to include all the links in the description. And yeah, I would love to welcome you back on the show down the road.
100%, dude. Happily.
Have a good one.
Thank you so much, Max.